What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this afternoon. So this is a really crazy day that we are seeing for AMC so far. We've had a lot of volatility, and we also have a lot to talk about in this video. We're going to be covering a brief update on the Ortex short interest and utilization to give us a better understanding of where these estimates are at the current time. And for the utilization, we do need to keep watching that metric because, in my opinion, it is the most important thing that we have in terms of determining when there could be some forced liquidations or forced share recalls that could potentially send the share price going much higher. Now, in addition to this, we are still going to talk about the potential for a gamma squeeze, but the other couple of things that we need to talk about are, one, the shorts have a very significant issue right now, especially with what we're seeing on the price action today. And there's also something developing over in China with this institution called Evergrande that is leading to a major market event. Now, if you guys have been paying attention to my channel over the last couple of months, we've been talking about the potential for an event like this to take place, but we did not know when it could potentially happen or a catalyst that it was going to that was actually going to set it off. With this situation with Evergrande, this real estate firm, it does have the potential to reach every single part of the globe and have a very significant effect on the global economy, which is then in turn going to affect this AMC short squeeze situation, which we will go over a little bit later in this video. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys want to see more videos like this, make sure you hit that subscribe button. So at the current time that I'm recording, AMC is currently trading at around $47.17. We saw a very significant dip on market open today. We got all the way down to as low as at the current time $47 or $43.77. When we come over to this Ortex update, the utilization actually dropped, which is very strange. When we look at what the short interest is currently at, 18.76%. What this is showing us is that potentially some shorts have covered their position over the last couple of days, or shares were going out on loan, they were not being shorted, and then they were just returned to the lending institutions. But we need to think about the dynamic of the things that have been happening with AMC over the last week. There has been a significant increase in the overall estimates for the short interest, meaning more shares have been sold into the open market. And when we're looking at what happened with AMC today, the share price was dropped down a pretty significant amount, but the apes weren't leaving. They continued to buy the dip, and this was all that they could push it down so far. We are down 14 cents on the day. Again, we did have a significant red day yesterday, so this is a lot of people coming in and buying the dip, whether it be institutions or retail investors. But you got to think about this. The whole goal of these shorts, if they are naked shorting AMC, is to push the company out of business, because then they never have to close their short position. They never have to pay capital gains taxes on that gain, and they can continuously just kick the can down the road, take out loans based off of that open position, and keep rinse and repeating. But the fact that they continuously cannot push the stock down to low enough levels really shows us that they are screwed right now. They have a big problem. And what we could have seen today, we do have to keep some of this in mind, is that when the price fell very significantly, we were just trading at almost $52, $53 a share. Then we came down all the way down to 43. It is very possible that some smaller shorts were covering some of their positions today, and that's why we saw this significant increase in the price intraday for AMC. Now, moving over on the conversation about this potential gamma squeeze that we have going on, Stonko Tracker does tell us a very important story about what we've seen go on today with AMC's price action. We now have 130,000 contracts in the money. So what we saw today was a lot of these weekly options contracts on this monthly options expiration date ran out of the money. When that happens, we know that the institutions were delta hedging a lot of these options that ran into the money due to the price action and just the nature of how hedging options that you sell works. But what we've seen is that since those options may have been unhedged in the morning and they're being hedged right now heading into the afternoon, meaning sold and then bought back in terms of the share amount, we could see some more buying pressure pushed into AMC at these levels. Now, again, we have 404,000 contracts out of the money. So if we can continue on this bullish uptrend after the day that we saw yesterday, we are really going to put a lot of pressure on these institutions to essentially force them to go out and pump more of that buying volume into the stock. Now, let's get into this conversation about the MOASS margin call. When we come over here, what we're looking at here is just the overall state of the economy and economic growth. A couple of days ago, closely watch Atlanta Fed's GDP forecast cut U.S. growth by 41%. That is a very significant decrease. Now, we've seen Goldman, Bank of America, Citi, a lot of these other institutions come out and do the exact same thing. Now, it also brings us back to this conversation surrounding the Fed. The Fed can't really do anything right now. In my opinion, they're kind of handcuffed in the actions that they can take. The smart thing for them to do would be to taper asset purchases. But what that would do is send the markets going lower. But the signs that they need to see in order to taper would be economic growth. If we are not seeing the employment numbers continuously increase or these GDP numbers beat any sort of expectations, the Fed is not going to taper. But the fact that we are seeing all of these data metrics come out much lower than expected, it is most likely going to send the market down eventually anyway. Now, shout out to this individual over here on Reddit for pulling this up, Region Formal. This is a really important chart that I don't think a lot of people have really grasped. We did get the inflation numbers yesterday, but a lot of people were saying, these look fake, they don't look accurate, there's no way that they are this low. But what we can see is that the actual inflation numbers, based on the calculations that they used to do in the way that they used to do it in the 1980s, inflation is almost at about 13%. The only time that it has gotten this high in the past recently was right before 2008. So that kind of feeds into our thesis of, well, there's not really any data metrics coming out right now that is bullish for the overall market and showing signs of economic health. Now, the MOASS margin call situation. So none of these two metrics that we have just looked at are really going to cause any significant drastic reaction right away. But this is. When we come over here, China Evergrande's liquidity crisis deepens, report flags interest payment miss. So what we're looking at here is Evergrande is a real estate company out in China. They are the second largest. And what they've been saying is that when September 20th comes around, they won't be able to pay the loan interest that they owe. You know what this reminds me a lot of? Archegos. Archegos was not able to maintain all of these maintenance margin requirements that they needed to in order to maintain these total return swap positions. Now, it wasn't just Archegos and Credit Suisse that got affected by this. It was all of the positions that Archegos was holding. So when we think about the real estate market as a whole, what you also have to think about is that the global economy, all of the different market segments, real estate, fixed income, equities, are all interconnected. Now, this Evergrande situation could be the first domino that starts to fall. We know that everybody is way over leveraged at the current time, and we can see this due to Archegos, Evergrande, and the margin debt chart, which has also started to show signs of deleveraging. Now, if we do see a major fallout from Evergrande, this is going to cause a massive problem on the global economic scale. And thinking about how Evergrande would tie into and compare to the Archegos situation, it's not just going to be Evergrande and its investors that get affected. It's going to be the major banks, which also have relationships with the U.S. banks, that have relationships with the European Union banks. It's a domino effect that could start to fall and spark a spree of margin calls and liquidations that is going to spread across the entire market. So this is something that I want everybody to be fully prepared for. But when we're looking at AMC as a whole, it's incredibly bullish going into the next couple of weeks. We saw very significant red day yesterday with all of the market volatility. And today, right now, we are bouncing around at basically flat numbers. And something else that I want you guys to understand as well is if we go out to the year-to-date chart on AMC, I've included this box right here. Now, what exactly does this box represent? So we can see that before we enter this box, we had a significant run up from around this $8 range all the way up into the $14 range. Very significant increase in the price of AMC. But what did we see the days following? We saw let's see right here, a 9.9% decrease, essentially flat day down 0.71%. Another red day of about 3.75% before we started the massive run-up at the end of May and the beginning of June. Now, the price action looks very similar to what we're seeing back then right now. But again, you have to think about that there's a lot of other different variables that we need to keep in mind. But again, this does look similar, and we could potentially be seeing this major next leg up in the near future. But again, nobody knows. We're just going to have to wait and see. So that is going to conclude this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.